Trading psychology is not about controlling your emotions. That is what amateurs think. Professionals know something different. Trading psychology is about understanding that you are an athlete and your emotions are just data, not the enemy, not something to suppress. Data. And like any athlete, you do not master the game by thinking happy thoughts. You master it by building systems, by adapting to conditions, by knowing your strengths and weaponizing them. Today, I am going to show you the 6 pillars that separate traders who master psychology from traders who get crushed by it. This is not therapy, this is performance engineering. Let's begin. 1. Adapt or die. Here is what nobody tells you. Your mind is not broken. Your strategy might just be outdated. Most traders blame themselves when they start losing. They think they lost discipline. They think their psychology collapsed. They think they cannot handle pressure. But sometimes the real problem is the market changed and you did not. Markets have regimes: low volatility, high volatility, trending, chopping. And each regime requires different execution. A strategy that prints money in low volatility trending markets will destroy you in high volatility chop. And if you do not recognize the regime shift, you will sit there thinking you lost your edge, thinking something is wrong with you, when the truth is something is wrong with your adaptation. You must know under what conditions your strategy works and learn to act accordingly. Meet Marcus. Swing trader. Great in 2020 and 2021, consistent profits, felt like he figured it out. Then 2022 hit. Volatility exploded, his setup stopped working, he started losing. And his first thought was, I lost my discipline. I am trading emotionally, I need to fix my psychology. So he read books, listened to podcasts, tried meditation, and kept losing. Because the problem was not his mind. The problem was his strategy was built for a different market structure, low volatility trends, and the market was no longer offering that. He should have been fixing adaptation while he was trying to fix psychology. 6 months of losses before he realized. The market regime changed, his strategy did not. Once he adapted his approach to high volatility conditions, the wins came back, and his psychology magically fixed itself. Not because he meditated, but because he stopped fighting the wrong war. We must collect data about our strategies and how they perform under different conditions. And when conditions change, resulting in low win rate environments for our strategy, we must know not to take trades. This is the first pillar. Before you blame your emotions, check the market. Is the regime the same as when your strategy was working? If not, adapt. Because trying to discipline yourself into executing a strategy that does not fit current conditions is not psychology mastery. It is self-torture. Adapt or die. The market does not care about your feelings, and it will not wait for you to catch up. So clarify under what conditions your strategy works, and adapt. 2. Build on strength. Most traders spend years trying to fix their weaknesses. Slow at decisions, practice being faster. Bad at analysis, study more. But here is the truth. Fixing weaknesses makes you average. Maximizing strengths makes you exceptional. You have a natural edge, something you are better at than most. Maybe you are fast. You see the setup and execute instantly, no hesitation. Or maybe you are deep. You analyze for hours and see things others miss. Both can be profitable, but they require completely different approaches. And trying to be both will destroy you. Everyone has weaknesses and we build ways to get rid of them or reduce their effects. But we should not stop there and must also build ways and systems to maximize our strengths. Meet Sarah and Daniel, both trading the same market. Sarah is fast. She sees price action and reacts. Intuitive, pattern-based, enters and exits quick. Her edge is speed. Daniel is slow. He builds models, analyzes fundamentals, waits for deep conviction. His edge is depth. Sarah tried to be like Daniel, spent hours analyzing, overthinking every trade. Her execution got worse. She hesitated, missed setups, because she was trying to add depth to a skill set built on speed. Daniel tried to be like Sarah, started taking faster setups, less analysis, more intuition. His win rate collapsed because he was abandoning his actual edge. Both were trying to fix weaknesses instead of maximizing strengths, and both were losing. What is your strong side? What sets you apart from others? You must find it and discover ways to maximize it for the markets. Here is the shift. Sarah stopped trying to analyze like Daniel. She leaned into speed. Built a system around fast execution, reduced analysis to 3 simple rules, focused on what she was naturally good at. Her performance exploded. Daniel stopped trying to be fast. He leaned into depth, built models, took fewer trades but with massive conviction. His performance came back, not because they fixed weaknesses, because they weaponized strengths. This is the second pillar. Stop trying to become well-rounded. Become distinctively excellent at one thing. The market rewards specialization, not mediocrity. When you first started trading, despite being very new, there were things you did well. Those are probably your strengths. Focus on them and build systems around them. If you are someone who works fast, do not try to become a swing trader. If you are someone who spends hours on analysis and gets good results, do not build a system around being fast. 3. Cultivate creativity. Everyone reads the same books, everyone watches the same videos, everyone learns the same patterns, and everyone wonders why they cannot make money. Here is why. If your edge comes from what everyone else knows, it is not an edge. It is common knowledge. And common knowledge is already priced in. Real edges come from seeing what others do not, from approaching the market like an entrepreneur, not a student. Creating your own edge is one of the best things you can do. Have an edge that comes from your experience of watching and interpreting price. Build your own edge on solid foundations. This will cultivate your creativity and also give you deeper insights about the trading game. Strategies everyone knows do not work, but an edge of our own is more likely to appeal to our strengths. Meet Jordan. Spent 3 years learning technical analysis, support, and resistance. Fibonacci, moving averages, everything the books teach, and stayed break-even. Because 10,000 other traders were doing the exact same analysis, looking at the exact same levels, taking the exact same trades. The edge was gone before he even started. Then Jordan shifted, stopped reading trading books, started reading psychology books, behavioral economics, neuroscience. Started asking different questions, not where is support, but why do traders panic at certain levels? What cognitive biases are driving this move? What fear is creating this pattern? And suddenly he started seeing opportunities others missed. Not because he knew more technical analysis, but because he was thinking differently. His edge became reading people's psychology and acting contrary to them. Because he was good at reading people and loved thinking about it, he saw this as his strength and maximized it. This is the third pillar. Stop consuming the same content as everyone else. Start thinking like an entrepreneur. See the market with fresh eyes. Ask questions nobody is asking. Build edges nobody is teaching. The best traders are not the most educated. They are the most creative. And creativity does not come from studying harder. It comes from studying differently. You can make money by doing what everyone does, but walking your own path will take you to another level. 4. Process discipline. Motivation is garbage. It comes and goes. You feel motivated Monday. By Wednesday, it is gone. If your trading depends on motivation, you will fail. Because success is not built on feelings, it is built on routines. Boring, repetitive, unglamorous routines. 30 days of the same checklist, 30 days of the same journaling, 30 days of the same pre-market prep. That is what builds consistency, not inspiration, repetition. So always think medium to long term. Follow your rules daily, but keep the end-of-month total picture in mind. Teach yourself to focus on process. Try to think on a weekly, monthly, even yearly basis. Get yourself used to this. Seeing short-term and acting accordingly can push you into unrealistic reactions and sabotage. Meet Alex, motivated trader. Would have great weeks, journaling every trade, following the plan perfectly. Then motivation would fade. Stopped journaling, stopped reviewing, stopped preparing. Performance collapsed, and the cycle repeated. Motivation up, performance up, motivation down, performance down. A roller coaster. He thought the problem was he needed to stay motivated. He tried motivational videos, affirmations, vision boards, and it worked for a few days, then crashed again. Because motivation is not a sustainable system. Discipline is. Focus on seeing how disciplined you were at the end of the month and seeing the result. Take a breath and continue with patience for this. Here is what changed. Alex built a non-negotiable routine every morning, same time, same checklist, review previous day, mark key levels, set alerts, journal the plan, No exceptions, no motivation required, just execution. And here is the magic. The first week sucked. He did not feel like doing it. The second week still sucked. By week 3, it started feeling normal. By week 4, it was automatic. And his performance stabilized. Not because he was motivated, because the routine removed the need for motivation. The decision was already made. Just execute the checklist. Creating routines and carrying them out, no matter the conditions, will make you much more disciplined. You do not need motivation. Motivation is not sustainable. What you need is discipline and building routines and systems for its continuity. Around your strengths. That is all. This is the fourth pillar. Build best practices into habits. Make them so automatic you do them even when you do not feel like it, especially when you do not feel like it, because feelings are unreliable. Routines are not. Athletes do not train when they feel like it. They train on schedule. You are an athlete. Act like one. If you need to go to the gym on Monday, you go. Your mood does not matter. It should be the same for trading. Following rules is inevitable, so you follow them. No room for negotiation. 5. The objective observer. Most traders drown in their emotions. Fear takes over and they freeze. Greed takes over and they overtrade. They are inside the emotion, consumed by it. Professionals do something different. They observe the emotion from outside, like a scientist watching a lab experiment. Fear appears. Interesting. Let me note that. Greed surges. Fascinating. Let me observe where that is coming from. This is not suppression. This is observation. And observation creates distance. Distance creates choice. And choice creates control. Observe your emotions as if they do not belong to you from a distance. Instead of seeing yourself as one with them, try to interpret them from the outside as a piece. That is not you. You are just experiencing something momentary. Do not make it part of you. Observe and interpret. Allow it to pass. Do not treat it as if it belongs to you. Do not make it part of you. Do not magnify it in your eyes or ignore it. Just let it happen and watch. Think about what you can learn, and you will definitely learn something. Meet Chris, used to drown in fear. Setup appears. Fear screams, do not take it. And he would not. He was inside the fear, merged with it. Then he learned mindfulness. Not the spiritual kind, the practical kind. When fear appeared, instead of becoming the fear, he observed it. Oh, fear is here. I can feel it in my chest. My heart rate is up. My hands want to pull back from the mouse. He described it, labeled it, watched it like a technician. And something strange happened. The fear was still there, but it no longer controlled him, because he was not the fear. He was the observer of the fear, and the observer can choose. The fear says, do not take the trade. The observer says, interesting input, but my rule says take it. So I will, when you make everything clear before the session. Tell yourself today, no matter what emotion I feel, I will execute my plan. If I am afraid, I will still take that trade, and if you feel fear during the session, you will go to that moment in the past and take that trade. Leave no gaps. Plan everything before the session. If you plan in advance what will happen no matter what, there will be no doubt, like, I am scared now, what should I do? If emotions affect your trading decisions, there is a big problem there. We should not act according to emotions. We should act according to system and rules. Because we set the system and rules. If they were not for our benefit, we would not have set them, right? So why question them? We are the ones who set the rules. What created the rules are our past experiences. Therefore, following them is in our interest. No room for questioning. If a rule is not efficient enough and you observe this for a long time, of course you can change it. You put something better in its place and become better. That's simple. This is the fifth pillar. Become the objective observer. You are not your emotions. You are the awareness watching your emotions. And once you see them as data instead of commands, they lose power. This is a superpower. Most traders never develop it. They stay merged with every feeling, and every feeling controls their execution. You can do better. Step back, observe, choose. They do not belong to you and do not let them. Do not give them power. Your emotions are ineffective unless you attach meaning to them. You are what makes them powerful. 6. Neurological rehearsal. Your brain cannot tell the difference between a vividly imagined experience and a real one. This is why visualization works, not because it is magic, because it is neuroscience. When you mentally rehearse a scenario, your brain fires the same neural pathways as if you actually experienced it, which means you can train your amygdala, your fear center, to stop panicking before difficult moments even happen. You can prepare yourself for difficult moments. You can imagine a trade where everything goes wrong and imagine yourself following all your rules despite everything going wrong, despite all your emotions. You can make this easier by practicing it in your head. Meet Taylor, terrified of taking losses. Every time a stop-loss hit, panic, heart racing, immediately questioning the strategy, spiraling. The amygdala was treating every loss like a survival threat. So Taylor started rehearsal. Every night, 15 minutes, eyes closed. Vivid mental simulation. The trade goes against me. I watch it hit my stop. I feel the loss. I stay calm. I close the trade. I move on to the next setup. Over and over, rewiring the response before it happened in real time. And here is what changed. 3 weeks in, a real stop-loss hit. And Taylor felt calm. Not because the loss did not matter, but because the brain had already processed it dozens of times. The amygdala recognized the pattern. This is not new. This is not dangerous. This is expected. The panic never came. And traders who know how to deal with losses make a big difference. Because this is the hardest part. This is the 6th pillar. Rehearse the hard moments. Stop loss. Drawdown, multiple stops in a row, missing a winner, holding through pullback. Whatever scares you, simulate it. Mentally, vividly, repeatedly, until your brain stops treating it as a threat. Athletes visualize the game before they play it. You are an athlete. Visualize the trade before you take it, especially the parts that scare you, because fear of the unknown is powerful. But if you have already been there 100 times in your mind, it is not unknown anymore. It is ordinary. And ordinary things feel ordinary. The integration. These 6 pillars are not separate. They work together. You adapt to the market regime so your strategy fits conditions. You build on your natural strengths so execution feels effortless. You cultivate creativity so you see edges others miss. You install process discipline so performance does not depend on feelings. You become the objective observer so emotions inform instead of control. And you rehearse neurologically so your brain stays calm when chaos hits. This is not psychology. This is performance engineering. You are not trying to feel better. You are trying to execute better. And execution is a skill built through systems, not wishes. Most traders fail because they treat psychology like therapy. They think if they just feel more confident, they will trade better. But confidence without competence is delusion. The order matters. Build the skills first, adapt to conditions, maximize strengths. Think creatively, install routines, observe emotions, rehearse scenarios. The confidence comes after, as a byproduct of competence, not before. I want to repeat what I keep emphasizing. Build systems and routines that will make trading easier and maximize your strengths. This will change the entire game for you. If you sit at the screen every day doing nothing and randomly pressing keys hoping for sustainable profit, unfortunately this will not happen. You can be profitable for 1 day. You can be for 2 days. But on the 3rd day, you will give it all back. So systems and routines are necessary. You must know your strengths and weaknesses, and you must manage them correctly. You are an athlete. Your emotions are data. Your mind is a tool. And tools can be sharpened. Stop waiting to feel ready. Start building the systems that make readiness irrelevant, because mastery is not about perfect feelings. It is about flawless execution regardless of feelings. And that is built, 1 pillar at a time.